Pros and cons of the VA loan. What are they? I'm here to help give you my honest opinion, having dealt with VA loans, conventional loans, and seen it from multiple different angles. My name's Evan Kaufman, your VA loan originator. Here's a few things that you want to know about the pros and cons of a VA loan. So, background on myself for it though. VA loans, that's where you're going to see everything for me. Background on me, I was in the military, in the Air Force for years, got out, built a real estate brokerage, so I've seen deals as a real estate agent, and then building a mortgage company, I've seen things as a real estate loan originator, specifically heavily working with VA loans and conventional loans too. So, seeing all that perspective, there are some pros and cons I definitely would outline for the VA loan. Now, obviously, you're going to see my marketing shows a VA loan originator. That's what we focus on. 70% of our business, active duty military, 90% VA loans, that kind of stuff. You're going to see it. That's our thing that we deal with in our bread and butter, and it is. So I'm very pro VA loan. However, there still are cons, and we're more than happy to point some of those things out. And there's some situations where VA loan might not be the best loan type for you, and you just got to be aware of some cases that other folks might think there are issues with VA loan that maybe aren't really issues. So let's look at some of the pros of the VA loan. If you happen to watch any one of our courses on like the VA Crash Course 101, I go over really the big three things. Because the VA is guaranteeing these loans, think of it kind of an insurance policy, you ultimately see that you can do a down payment of 0% if you choose, or effectively finance 100% of the loan. And if you do so, you don't get punished with private mortgage insurance. That's where if you put less than 20% down on a conventional loan, you're typically going to get hit with private mortgage insurance. That's that monthly penalty. If you do an FHA loan, there's called mortgage insurance premium, and that's almost permanent. Some folks are like, well, Evan, there is unique scenarios. Yes, there's unique scenarios where it can fall off, but in most cases it's like permanent with the loan. And that's another monthly penalty for putting less than 20% down. VA loans, you can put less than 20% down. You're not going to get hit with private mortgage insurance. And then lastly, the VA loan typically has less risk because it has that VA loan guarantee. You should be seeing a lower interest rate. Now, at some institutions, you won't see rates change between conventional and VA because VA loans are the minority of the loans they do, so they see them as difficult, kind of see them as a burden, so they up the prices on them, so they balance out with conventional. But in reality, mortgage companies can get paid better for VA loans, meaning that what you should actually see are lower rates. That's how we kind of operate. We realize that we should get the paid same if it's conventional versus if it's a VA loan ultimately, and so that does reflect in more competitive interest rates on a VA loan. You should see more competitive interest rates on a VA loan, unless, as we'll talk about here in the cons later, happens to be a 15-year mortgage and a couple other things. So those are really your big pros. With a VA loan, you can do something called an interest rate reduction refinance loan, or a streamlined refinance if the opportunity presents itself. Now, what is that exactly? Got a lot of good videos on it. But that means that if interest rates have happened to come down, and it's been at least 210 days from your first payment, and we can reduce that rate by at least 0.5%, then you can ultimately do a refinance with no appraisal, no income documentation, and in many cases might not even need a hard credit check. So you can do them real quick, clean, easy to do, and lower that rate as long as rates have come down. It's a really powerful aspect of the VA loan that no other loan type really has. And what I like to say is think of it this way. You lost your job. You happen to be underwater on the home even, you can still do a VA streamlined refinance, which is pretty incredible. You can't do that with just a standard conventional refinance. So even if conventional and VA are getting close, that I'd say edges it out. I'm talking too much pro. Obviously there's the bias side of it of, hey, VA loans, there's a lot of pros to it. There are definitely still some cons or some things that you got to consider from the other side. So some of the cons of the VA loan is, number one, there is something called a VA funding fee that is applied. Now, that's a fee charged directly from the VA to you at closing. It is the one charge that the VA allows rolled into the loan if you choose it. And that typically is going to be anywhere from 1.25% to 3.3% of the loan amount, depending on your down payment, number of use of the VA loan, and ultimately if you have multiple VA loans that are outstanding. But here's the deal. If you happen to have VA disability compensation, 10% or greater, the VA will waive that entirely. And on top of that, let's say that VA funding fee happens to be 2.15%. That's if you're putting 0% down, it's your first use of the VA loan. Well, if your interest rate still happens to be somewhere between 0.5% and 1.5% better than a conventional loan, that still probably makes sense. 2-3 years in, you're already starting to come out ahead. And on top of that, you don't have that private mortgage insurance, which when you do the math, it can make a big difference on that cost analysis. So ultimately, though, that VA funding fee still is a real cost that you got to be aware of. Now, if you have the VA disability comp, remember, it's gone. And those are the scenarios where I'm like, VA loans are no-brainer. You happen to have 10% or greater VA disability comp, or you're getting out and you're expecting VA disability comp, you tell us because we can usually get waived or refunded once you close. In those scenarios, VA loan's hard to beat. I mean, there's no VA funding fee. The rate's typically going to be more competitive. You can put lower amount down if you want and not get penalized. But if you put money down, remember, there's always a benefit to putting money down, and you just have less risk. But know that the VA loan in those scenarios is just really strong. Now, where there's still a con with the VA loan, we talked about VA funding fee there to it. But if you're going to do a 15-year mortgage, conventional loans get really close to VA loans on their rate and all their aspects for it. So it gets real close. Now, have we really ever seen conventional loans beating VA rates on 15 years? Sometimes it can get real close to that, but that's where it comes down to that, hey, do I want to use the conventional so that I maybe don't have that VA funding fee in that scenario, so it's more worthwhile. If you have similar rates or close to it on a 15-year, and you have that funding fee on a VA loan, but you don't on conventional, that could edge out. And that could mean, hey, conventional might make sense. And we run scenarios like that for clients so you can see them side by side if that's your scenario. Now, typically on those conventional ones, you have to have high credit score, 15-year, put in a good down payment to make it worthwhile, but you just got to run them side by side. But know for the VA loan that I say a con, or I guess it's less competitive when you're looking at 15-year level loans for VA versus conventional. Another con with the VA loan, which is something that's just more stigma than anything in some places. Some areas of the country, sadly, still see VA loans as their old former self, that they might have been slower, they had issues faxing things in, the appraisals were terrible, etc. Here's the thing, the VA loan now is having its 80th birthday. It has changed dramatically over those 80 years. And especially the last few years, there have been some really good big enhancements to the VA loan, including no more loan limits on, especially your first use of the VA loan, no county loan limits being applied. Some incredible benefits, some changes for appraisals that have really been good enhancements. And there's going to be some more here in the future, sure of that. So the thing is, some folks who maybe have been selling real estate or involved in real estate for the past 10, 20 plus years, they might know older, former versions of VA loan and have a stigma kind of against it. Oh, hey, it didn't work this time or it had issues. Not necessarily the case today. So that's one of the things where it's important to be able to educate and help walk people through, hey, how has the VA loan changed? But that still said, the appraiser does have to do a habitability check of the home. Sometimes that can result in repairs that sellers need to make. It's not a substitute for a home inspection whatsoever. Sometimes sellers see that as an issue. For buyer's sake, though, it's actually a good thing. It's like a double check on just the habitability of the home, effectively. Those minimum property requirements is what they call them. And that's like a pro and a con, kind of 2-in-1. Not sure where to fully put that one. Depends maybe on your angle and how you see it. But it is something that definitely helps benefit veterans and active duty members using the VA loan. But overall, really, con's sake, you got the VA loan funding fee that you have to deal with, but can be waived. And you just have to balance it against the benefits of using the VA loan in the first place with the lower down payment, not getting penalized by private mortgage insurance, and that lower interest rate. So overall, is the VA loan really worth it to use it? Some people say every time it's the best. I say it's usually the right loan option, about 85 to 95% of the time, depending on where you're at. So if you happen to be putting a large down payment, you've got super high credit, 800 plus, and you're subject to that VA funding fee, and you're planning on doing a 15-year mortgage, that's where conventional can get real competitive, and it might not be worth it to do a VA loan. And we can show you the numbers as to why, but that's where you might not be wanting to do it. But if those scenarios aren't necessarily true, VA loan's typically going to edge things out. Sometimes if you're like, hey, you're maybe not the perfect credit part of it, it still could be real competitive. We just got to kind of compare them. The 15-year is usually what pushes conventional to be the most competitive with VA. But just know that in most scenarios, a VA loan really is your most competitive loan product for you. If you're a borrower buying with a VA loan, you have the opportunity to use it. We have a couple other good videos that break down examples, give you understandings of how that looks for stuff. If you want any questions on it, want to reach out, feel free to. My name's Evan Kaufman, again, your VA loan originator. Hope this helps you go out there and win a home with a VA loan. Take care.